Hello, hello.
Hello, good morning.
Good morning. How are you?
I'm very fine. How are you?
All right. It's good to
Okay.
hear from you.
Yeah, I hope you're having a nice week.
It's tough, but we keep going.
Okay, don't worry, don't
Yeah.
worry. Hi.
Thank
So,
you. How
so
is yours?
mine is good. I'm grateful. Yeah,
Mm-hmm.
so and I'm glad for this class.
Mm-hmm.
Uh, Today I had told you we will cover two classes. I hope you'll have time, but I will go through them quickly so that we can cover both. But in case we may have a little bit of time, we can have a like 10 minute break before the
Mm-hmm.
next class. Is that okay?
Okay.
Okay.
Okay, that's fine.
Okay, good.
Yeah. I
So
hope the background, can you hear the background noise
not really, not
from
really,
me?
no,
There's
not.
some construction going on.
Oh, not really. I'm not hearing any background noise.
Okay. Right.
Okay.
Okay.
Okay, so let me share my screen. Have you been practicing?
I will not lie to you. This has been a very busy week.
Yeah, no worries, no
But
problem.
coming, yeah, coming days I'll be a bit flexible.
Uh-huh.
So I'll give it more attention.
No worries, no worries. So today actually, I'm glad I asked that question because today we're gonna cover a topic that is related to exactly that. So let me get
Mhm.
my notes just a moment. Mm-hmm. Is it okay? Uh, just a moment. Just a moment. Yeah, here we have it. So we have today we're gonna start with the class on algorithmic trading, and I know it's not a fan favorite, but I normally like to include it in my coursework because it is something that helped me a lot, first of all, and it helped me mostly in terms of psychology and risk management. And it helped me know that um, even if I don't have time to trade, whatever my algos can be running in the back end working for me. Okay. So it's like an you have employed somebody, but this employee of yours, you're not paying them per month. They are working for you 24/7. Okay, not really for 24/7 because the Forex market is open. It has a timeline, but you can imagine an employee that is working, is always on their feet, working day in, day out, and they free up your space. So I don't know if you have ever heard of any experiences with algos. Before we start, can you tell me what is your take in regards to algorithm?
Um, so I have both a direct and indirect answer. I'll start with the indirect one.
Mm-hmm.
At the time I would discuss with one, two people,
Mm-hmm.
and the argument was used to be, what is it about an algo? And I'm sure maybe some people listening have come across that.
Mm-hmm.
That argument, that what is it about an algo that that somebody wants to sell, that they themselves have used or
Mm-hmm.
are not using, and they've not become billionaires yet.
Okay.
Like, so that person was speaking from a trust level. I think it was like 2 years ago.
Mm-hmm.
Um, and yeah, and they were saying that some work and don't work. But personally, I've tried one in the past.
Mm-hmm.
Um, so this gentleman, I know at the time they were also trying to learn FX.
Mm-hmm.
They were very dedicated to it,
Mm-hmm.
but the spaces which they were conducting the learning from at the time were too expensive for so many people.
Yeah.
And so I came to learn later.
Mm-hmm.
He and his team came together to make it affordable and accessible to more people.
Mm-hmm.
And they came up with that bot.
Mm-hmm.
Did I actively had to use it? Not really, because I also was cautious because I did not fully understand um risk management.
Mm-hmm.
I didn't understand yeah, I mean, there are just some 1, 2, 3 things I didn't understand. And also, to be honest, I didn't have enough disposable income at the time. So that's why I didn't want to venture some of the trade.
Okay. Okay.
Yeah.
That's a good take, and from your experience, I know I like to ask somebody because some people they have never used, and some people have used and have bad experience. Some people have used, had good experience, and then bad experience. So I normally like to see somebody's take before I dive deeper into the class, and also for me to know how to go about. Okay, I'm not trying to convince someone to be taking algos, but I want like to somebody to be open-minded, and because it's a very, for me it's a very important topic, and for many it's a controversial topic. I'm sure you are aware of that, right? Because a lot of
Yes, in the era. Mhm. And what is encouraging me to look forward to this class is the fact that we're also in the era of AI and I don't know, machine learning.
yes,
And I know this trading space is not spared either.
yeah, most definitely. It is actually one of the areas that AI came and, or rather, that was influenced by technology. Even the computer science people, most of them, if you ask them their dream job, they'll tell you they want to work in the finance sector because that's where
Mhm.
it practically started. Other than phones and cars and all that, many and the highest paying jobs are in finance. So people learn programming and then they end up going to the finance route because it has more money. Anyway, so I think now we have common ground. And welcome to today's class about algorithmic trading, also called algo trading, or some people like to call it robots, of which they are. But yeah, they are called
Mm.
robots, bots. Yeah, that's anyhow anyone wants to call them, but they're just employees. I like to call them employees. Your employees that will run 24 according to the time you've given them. Like mine, I normally like them to let them rest. I wake them up at 5 a.m. and make them sleep at 11 p.m. Kenyan time. Almost all my robots, I have engineered them to do that. And even the settings, I like to choose that. And yeah, so they're my employees and I love them. Sometimes they're disappointing, like today, but sometimes they're very good, like yesterday, the day before, okay, like maybe last week and all that. They can make you a lot of money, they can lose you a lot of, not so much, but with risk management, since you know how you engineered them to work and they work exactly that way, it is good. Me from experience, I love them. Now, today's
Mhm.
topic, I'm gonna divide it into two parts because there are two parts in algorithmic trading. Part A is the user, the person who is not a programmer, and this course will focus on that. So, and then the other path is for somebody who is an algo developer or a programmer, which I will focus on in my YouTube videos from next year. I will start doing tutorials on that. But for this class specifically, I'll just mention briefly about that and for you, so somebody who may be interested, but for a normal trader, they're also called algo traders because they employ algos. For the algo trader user, or rather a non-programmer, this course will be for them. So we're gonna cover uses of expert advisors in MQL5, sorry, in MT5, MT4 for CFDs. They are called expert advisors or trading bots. Um, and in maybe Binance, they're not normally called trading. They're not normally called expert advisors. They are more called trading bots or trading scripts of that nature. They have different names. So, but when I say expert advisor or EAs, don't get confused. I'm saying trading bots, which is the name for MT5 users, MT4, MT5 users. Okay. So
Yeah.
we're gonna focus on selection, testing, and risk management. No coding required, so don't worry about the coding. It won't be for you this time, but please understand because you need to understand one thing. I normally like to tell people you need to understand how your bot is working, what strategy it is implementing, make sure it's doing what it's supposed to be doing. And also the income potential. I normally say income potential with a good bot, you can make $50,000 to $500,000 annually plus per year. So that's the good side. If you have a very good bot, you can make good money. And remember, you don't have to lift a finger, just some management here and there. For the path of the developer, later, maybe a course specifically for you, but let me just mention, you're gonna see how to design custom trading algos from scratch. The required programming languages like Python, MQL5, MQL4, C++, C Sharp, and so on. And then greater flexibility and customization, and then the income potential for you guys who are gonna be developers is higher. So from 150K to 1 million plus at top firms, or if you get a person or an investor for you, it can be roughly there. So that's the good side of that. And even you can make for yourself such amounts if you're selling them. Now, I need to differentiate two things because I'm sure in the finance or rather the trading space, there are two variations. There's algo trading and quant trading, and they are different. There are differences between them. So I know you have had quant, I'm a quant, I'm a quant, I'm a quant, and then you've had I'm an algo trader, I'm sure you have heard that. So quantitative finance, hiyo ni a category they are still doing the same thing. It's just that they have two different categories. So the definition for algorithmic trading, let me just shorten it to algo trading, is automated execution of trading rules. So remember, you need to have rules, and then you automate the execution. So your algo is doing exactly what it's supposed to be doing. And then for the quantitative side, for quantitative trading, they build more mathematical models to identify opportunities. So here is when things like machine learning comes in. Okay. So I hope you're getting the difference. Let's cover another one. So the primary focus for algo trading is automation and speed. For quantitative trading is mathematical modeling and statistics. For example, for me, when I was in campus, I did economics and finance. There's a unit called statistics. We used to do R, a programming language called in statistics called R. So that that was now my first introduction to quantitative finance. Rehema, can you hear me?
Yeah, yeah, I can hear you.
Yeah, so for example, I was finding it a bit hard because of course, every programming language when you experience it for the first time, you're like, oh my gosh, sijui, it's so hard. But now it makes sense because you are doing modeling, and economics is all about modeling and all that. So now this is where it comes to play in. So for the skills required for an algo trader trading. Sorry.
No, it's okay.
Okay, for the algo trading, we have trading knowledge. You need to have trading knowledge and basic tech understanding like programming. And then for quants, you need to have advanced mathematics, statistics, and programming in your skill set. Tools required, tools used. We have ES trading bots and MT5, MT4. And then for quantitative, we need Python, R, MATLAB, machine learning, and so on. And then strategy types, we have trading, trend following, breakouts, mean reversion. And then for quants, statistical arbitrage, factor models, and ML. Okay, up to there, you can note that for first of all, for quants, it's more advanced, and then it uses a lot of statistics. It's a statistical as there's a statistical aspect of it's a statistical aspect of trading. And then for algorithmic trading, it's just the normal strategies like RSI, and then you code it into a bot. If it's Bollinger Bands or support and resistance, you code it into a bot. Okay, so that's the difference. For algos, just strict rules and of your strategy. For quantitative, it does more of statistics. It factors so many things in real time for the model to work. Does it make sense? Sorry, for the model to run. Yeah. So, and then education, you can be self-taught. Being self-taught is possible for algo trading. And then for quants, it is a bit advanced. You will even need most quants are PhDs. That are employed
Wow.
by big firms are PhDs. So, but you can go that route. Masters, you can break in with masters as well. So from masters upwards, that's where the quants lie. When you hear somebody is a quant, just know at least for them to get a good job, they have to have a master's degree and going upwards. And then career paths for algos, you are self-employed. You can be self-employed. You can be a prop trader, like with a traditional proprietary platform or floor trading floor, or you can be an EA vendor, like you can just be creating and then selling them. And then for the career path for quants, you can be a quant analyst at hedge fund, quant trader, or a quant researcher. In their category, we have three: quant researcher, quant analyst, and quant trader. So, and then we have typical salary. We have for algo trader, you can have 50 to 500K per year. And then this is the worldwide standards, not Kenyan standards. But according, nowadays Kenyans get job from all over the world, so that's good as well. Also, and then for the quant traders, the starting salary actually mostly is above $100,000. So it's 150 to 1 million for the top tier quants. And then barrier to entry is medium to high. So that is the job aspect of now this. Remember, this is a business, this is a job, this is a profession. So I needed to point that out so that you can see like the opportunities that it brings forth. But for you, remember, you'll just be an algo trader who will be maybe you learn
Okay.
how to buy them, because if you don't, you can choose not to make. So if you are just buying them, I will teach you now in this course how to get the best of them and then employ them. Okay? You had a
Okay.
question?
No, I thought you were wishing for me to become a quant trader one day. Is that I say that would mean I go back to college and change my course.
No, 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 no pressure, no pressure. Actually, this is most that go that route are mostly engineering majors, and any engineering, any mathematics major, economics and finance majors, and which other one? Computer science. Those are the five main that normally go that route. Because remember, any of them, unajua kuna mtu anaweza tafuta job akose, then they have this opportunity and it is allowed. So even when you're going to apply for your masters, they check the degrees. They can pay. You can join with those degrees. Even business degrees, I think some of them allow. So yeah. So okay. So the career opportunities, as I had mentioned, let me just mention quickly. For algorithmic trading is personal automated trading, employment at prop firms, selling or licensing EAs, like what I do, I license them, I make them, license them so that people cannot steal them, and then I sell them to people. And then you have teaching and consulting, and then management. You can offer managed account services, like I can manage accounts for people, and then they pay me like 25 or 30% performance fees. That's another option, okay? And then we have quantitative trading. Quant analysts, they can become quant analysts at hedge funds like Renaissance to Sigma Citadel, and then quantitative researcher developing new models, and then you can do academic research in financial mathematics. For people who do finance, they know this is very huge. They partner with universities to just do research for finance. And then you have starting a quantitative hedge fund. Like for me, it will be one of my goals to start a quant hedge fund in future. Now, let me just mention quickly, this is now the last part for the algo traders algo developers. Let me just mention because it may be important for them, but I'll leave the notes for them. So the programming languages by platform, each platform is built upon a certain programming language. So like MT4, MT5, who create EAs, they have their own programming language, which is called MQL5, MQL4. And then the underlying syntax, or rather the language, is C++. So it's MQL5, MQL4, but it's similar to C++. And then TradingView, their language is called PineScript, which is easy. And on TradingView, we have indicators and strategies, and it also offers visual backtesting. All of them, by the way, they offer backtesting, very important actually when it comes to trading. And it just shows to it goes to backtesting. We're gonna see that it helps in knowing how powerful your strategy is. You may think a strategy is good, but when you run it under a backtest, it will blow your account. Same case with you may think your strategy is not good, but once you run your backtest, it's amazingly good. So that's what I mean by backtesting. And one way of doing now the professional backtesting, not the one you go candle by candle on TradingView, the one that you go statistically hands off, is normally you write the EA and then you run the test. You give the robot the rules and then you run the test, and then you see, oh, this mini strategy is amazing. So that's the professional way of doing it. So for example, if you come and tell, but my strategy has 80% win rate and it offers 1:2 risk reward, blah blah, nitakwambia hiyo strategy ni normal, itatumekia do. Wacha nitengeze bot nione kama ni ukweli, and then you go, you see, kumbe it has like a 20% win rate, and then it has like a risk reward of, I don't know. So you leave it alone, okay? I've done so many of those things. I've seen many good strategies. The same strategy on paper, but in real sense, they don't work. So for Binance and Bybit, we have something called an API. So you build a script by Python, and then you attach an API so that it can be sending. It can be sending trades on Bybit and so for crypto, Bybit and Binance or any other exchange. So that's how they do it for that side. And then it's hard. That is a bit hard. For MT4 and TradingView, it's easy. And then for MT5 is medium. And then again, Python for other interactive brokers, Python as well. And for CTrader is C#, and the programming language is called C-Algo. So, and there are others. So there's so many more for NinjaTrader and all those other platforms. Each has their own programming language. So, but the good thing about programming is once you master one programming language, knowing the others is normally very easy. So why understanding matters even for non-programmers? It's better, it helps you with better EA selection and vendor evaluation, because that is what you're gonna do. And then you are going to have an understanding of which parameters to optimize. You're gonna effectively troubleshoot when issues arise, and then you're gonna avoid scams and unrealistic claims, and then you're gonna have proper risk management and implementation. So I know many people normally say, mi nilinunua bot alafu ikakuwa ni mbaya, blah blah blah, but probably they didn't do their own due diligence, so, or they didn't know how to go about it. So maybe even the algo was good, it's just them, they didn't do their homework. So that's why this class is normally important. Now, the core advantages of algorithmic trading. The main one, which is number one, is normally psychology management. Remember, so far from class, can you identify, even before I started, I should have asked, can you identify one thing that would limit you from becoming that would make it hard for you as a trader? So far from what we've learned, could you just point out one thing, like, would make it hard for you as a trader?
I think analyzing so many charts at once, or spending a lot of time on the charts.
Mm-hmm. So that by itself is a very, very good problem that many of us normally have, and it goes to the mentor, like it offers, okay, it becomes tiring for the trader. So utaona mtu atakuwa juu ya hiyo tu kukuwa on the charts all the time, you become tired, you even tire your brain, and it ends up being even burnout, especially for something that you are doing and it is not giving you returns. So it's a psychological problem that may arise. So algos help in psychology management because and there are so many ways it does that. Sorry, it does that, but the main is it helps with preventing it helps you with protecting you from psychological issues like fear, greed, and then revenge trading, emotional decision making, and overconfidence after wins. All these valid issues we're gonna face in the next class. We're gonna see in the next class of psychology. They will be solved by algos. Another one is algorithmic. It offers sorry, unasikia kelele? Sorry,
Hapana.
usikia kelele? There's so much
Mm,
noise in my house. I don't know if I can pause just a moment.
okay.
Unanisikia?
Yeah, I can hear you.
Just a moment. There's so much, just a moment. Can you hear me now?
Yeah.
Okay, sorry for that. I hope you didn't hear me raising my voice.
Yeah,
They are
I
so
heard it
loud.
here.
They are so loud,
Mhm.
even I wasn't able to concentrate. Anyway, we have 10 minutes remaining. No way. Okay, let me go faster then. So
Mm.
the solution that it helps with is zero emotional interference. So you can go to vacation and your algo is still running. It executes every valid signal consistently, so you are not worried like it will fail unless your computer doesn't have space. So that's normally another factor. And then it goes with no fear, no greed, no revenge trading. Everything you set it to do, it does. And then it has disciplined position sizing. So if you tell it just risk 1% per trade, it will do exactly that. Even if it's compounding, it will still stick to the rules. The impact is 70 to 80 of retail traders lose money primarily due to psychological factors, and algorithmic trading solves this. So that is the main advantage. Remember, people make money in trading, but because of psychology and issues like revenge trading, greed, hizo vitu mingi, that's why we return back the money to the markets. This execution advantage is that the reaction time. So for manual trading, you'll need 1 to 3 seconds to think about, do I enter, do I not, and then algos will just do in milliseconds. Order errors, very common in manual trading. Utaingia, haingii, unaenda kuweka one lot, haingii. But algorithmic trading, it just enters automatically. Missed opportunities are frequent. You can sleep, or you are maybe at work and then you forget to enter a trade, or you miss an opportunity. But with algos, it runs 24/7. And then for simultaneous pairs, you can do 1 to 3 only. Even me, more than 2 is too much for me. It's too much on my brain. So I like to stick to only one thing, which is gold. Gold enough is tiring for me, but I love it anyway. But it is a problem that I cannot add on another like US 30 or any other. So I stick to only gold, or one pair at a time. But for algos, you can have more than 10 working at the same time. So that's another advantage. And then precision. For manual trading, you approximate, but for algos, you do it at the exact pip. Entry, exit, stop loss, all that. The speed impact in fast markets, 2-second delay may equal to 20 to 50 difference in entry price. So I love that about algos. And then number 3, risk management superiority. It is the best way to manage your risk, and I love it for that. Because it has automated controls, like it calculates the exact loss size on account. Utashinda hapo ukisema okay, 30 nafaa stop loss inakuwa 50. Unakumbuka ile formula nilikufunza the previous class? Sijui you start calculating $100 over 50 times 0.1, and hii ishajifanyia automatically. It places stops immediately with every trade, no exception. It enforces hard limits on total portfolio risk, prevents overexposure to correlated pairs. It automatically stops trading if daily loss threshold is hit, and if you've set that feature, and then reduces lot size during losing streak. And then critical advantage is humans often skip stops or move them. Algorithm always execute risk rules. And number 4, the thing that I love the most about algos is compounding. You can go after 5 years and then you find, hey, ulikuwa umepata pesa mingi. So it works like the stock market. For example, you bought a share in January and forgot about it. By December, utapata hiyo share imepanda. Same case. I normally like to give the example of that. So a 5-year comparison, if you are trading manually, year 1, at 15% average, algorithmic, at 27%. Let's just give it that rough estimate because it is more efficient. And then the starting balance will be $10,000. So with an algo, you will end up having 64% more profit than when you are trading manually. So I normally like to give that option to my students. And the reason why is because it offers consistency. Algorithms execute 100% of valid setups with exact risk every time. So it is good for that. And then I like to give it to offer it as an additional aspect to manual trading. So you can continue trading maybe a small account, but you have your algo running on another account, which will not a guarantee per se, but will ensure you're still making money in the markets. So diversification made easy. What algos enables, you can trade more than 10 pairs simultaneously. You can run multiple strategies, trend, range, breakout, and so on. You can monitor exotic pairs you'd never watch manually. and then you'll execute trades on correlated markets for hedging. Let me give you an example from my point of view. I have my first my very first year that I made successfully was a breakout year, and I learned that it is not good with currency pairs. But the only currency pair that worked well with it was USD JPY. It worked perfect with gold, US 30, and all those other that move very well. But for pairs, could you guess why it doesn't work well with pairs with currency pairs? Which is a very common thing, but you didn't think about it. Could you guess? There's no wrong or right answer.
Okay.
Okay, let me help then. So the reason was pairs don't move that much. For example, nikipeana Kenya shillings versus US dollars, imeishi 128, 129 for a very long time, almost 8 months, ndio? So currency pairs, they don't move that much. Like they move like they're not like explosive like something like gold. They don't have that momentum. You get? So for a breakout algo, it is not good for it can work, yes, but it will be wastage of time. No. So the only one that had that explosive move was consistently was USD JPY. And maybe Euro USD, but it wouldn't work well still because you're just wasting your time and resources. It was giving like so little for the same return you would have for others. So I've left an portfolio example here. For example, for trend following, you see 30% capital on Euro USD, GBP USD, range trading because it likes to range. For breakout, USD card. For AUD, NZD for mean reversion, ama retracement, and then for gold, momentum strategy. So you see, gold works very well with anything to do with momentum. Sawa. So breakouts zita always work well with gold. Breakouts na gold zinaenda hapa kwa hapa. Ama there's also US 30, even GBP, JPY can do well, or any pair that has good momentum will definitely work well with a breakout here. So time freedom. So this is the main one. One of the main reasons also. Imagine I told you last year I was sick. I was admitted for a while in hospital, and I couldn't trade. So in a time like that, because it wasn't even when I was experiencing maybe severe pain, I couldn't even have, the only worry I had to have was my health. So I didn't want to trade or do anything. So you see how helpful now an year comes in. So you just let it will work for you even if you go on holiday, maybe you're not feeling like trading that day. So that's the good thing about it. So you get time reclaimed. When you're trading, you'll do 40 to 6 hours screen time. For algo trading, maybe 5 to 10 hours screen time, just monitoring. You're saving almost a month, 200 hours, equivalent to a full-time job. So that is the best thing about you are reclaiming your time. You can go on vacation and just work. The same 20% you would have made manually is the same 20 your algo is going to make for you. So that is the best thing I love about it. Okay, so I think I'll go faster because I see time is not on our side. So, do you have any question maybe before you proceed?
Mine is just a comment to say it's beneficial because I've often wondered. Imagine you've put a swing trade. I don't know. Maybe your lights went off. I don't know. Or
Yeah,
you've gone away, or you're traveling. Those kind of things. So it's good to get at least it is a convenient tool to use.
yes. So, and I like it for that because it frees up space for you. I don't know if I'm recording by the way. We are recording?
We are recording. Yeah.
It frees up space for you, and it helps you manage your psychology. Like, you don't have to be stressed at all about anything trading related. That is one thing that I have appreciated about algo trading. It helps a lot when it comes to that. And then the okay, backtesting now is one of the main thing that helps bring the importance in light, because you need to understand the performance in reality. So the performance of any strategy in reality. So for example, if you wanted to be employed by a hedge fund, they would ask you, which strategy do you work with? You tell them, oh, I use Fibonacci. Have you tested it? You tell them, oh, I've back tested it. Sindio, lazima atakuuliza, sindio? The opposite of backtesting is forward testing. So backtesting is looking backwards, forward testing is looking forward. Like, we are testing now from now, testing forward now, mostly in demo. So you need to do the back testing. You need to test your strategy, and you put it to stress test, and you take all results with a grain of salt, and if it's bad, you accept the reality. So that is what I mean. So backtesting is testing a trading strategy on historical data to evaluate performance before risking real money. Very, very important. 3 testing stages, why results differ. So you need to backtest historical data first of all. The characteristics is perfect condition is assumed, no slippage or delays, complete historical data, risk over optimization. So what it means is you do not over optimize your algo or anything. You just go with the rules you've given it based on previous historical data. And then you have typical performance after your backtest will be 100%, and it should give you 100%. And then the stage 2, now once you see your strategy has given you good returns in your backtest, now take it to a demo account. You do simulated tests. So you take maybe an amount and you put the same algo, you see if it is working correctly. Higher. The same thing applies. Real-time price feeds. Now this is real-time. Realistic spreads, still simulated execution, and then no emotional pressure, may have better feels than real accounts. Remember, I normally tell you that as algo traders, we do so much, we love demo, because demo tells us we do so much demo. So mtu akikwambia mi sifanyangi demo, as you do it all the time, because you have to test all our strategy and stress test it. So here, now this is the stage where it comes in. Even when you're going to buy an algo, make sure you stress test it in a demo account. And then the typical performance is 85 to 95% of the backtest results. So it's gonna give you a bit of promise. But still take it with a grain of salt. Why is it different from the 100%? It's because the spread variations were not in the backtest. The real-time data gaps, there was real-time data gaps, and then weekend gaps affect some strategies, and then algorithm bugs appear in live conditions. So that is why there's a bit of a difference. And then finally, real account. Now this is now where you are supposed to test, but I pray and I urge you, don't start with a lot of money. Start with a small amount of money. I normally tell people, start if you really want to do, because you can do demo for 1 or 2 months, but for the real account, don't put your $10,000 first. Start with $100. See how it performs in the real account. See if this broker is stealing from you. It has so much slippage, yani in a demo account unapata more profit than in a real account. There are some instances that happens. So you need to, this is where now you are going to be told the truth. So you are going into the actual market conditions. There's real slippage during volatility, and then there's potential requotes, and then there's spread widening during news, and then there's liquidity constraints, and then there is technical issues that may be possible. So this is all these things you're gonna see it in now your real account. But start small so that you see all these issues and see how to tweak them. Higher. Typical performance is 70 to 85%. You see, it's going downwards. It's going lower and lower of the backtest results. So why? Further degradation, it's because slippage during volatile periods normally happens. There's wider spread than demo. There's execution delays during high volume. There's possible psychological interference, like you want to go and control your money. And then there's market impact on larger sizes. So this is very, very important. I think you'll understand it once you do it practically, but it's important that I mention it. So performance degradation summary, you can go and look at it, but at backtest, you have 100%, which is the baseline assumed conditions, and then demo 85 to 90% variable spreads and minimal slippage, and then live small accounts, we have 75 to 85%, real spread plus real slippage. Slippage inakwanga mbaya, utaiona tu, sisi ndo tunai understand, but it normally happens, especially times are news. And then you have live scaled, that is 70 to 80%, and then higher slippage, which is 3 to 7 pips, which is hurtful, very, very hurtful. So making results more realistic, it's best. The best practice is use real average spread in backtest, add 1 to 2 slippage assumption per trade, use quality tick by tick historical data, account for trading costs, commission swaps, test across multiple timeframes and market conditions, and then use walk forward testing optimized on one period, test on the next. I'm talking too much. Let me not cover more on that. But I don't know if this formula will be important for you. So,
It is.
okay, the expected life performance, if you want to know the expected life performance of your algo, normally I got this formula from somewhere. You do the backtest results and then multiply it by 0.75 minus the annual cost. So for example, if you see your backtest, you do an yearly backtest, say on gold on that year, it gives you like $3 million. Multiply that by 0.75 and then minus all the costs that you incurred. That would give you like a good baseline. Example, backtest 50% annual return, apply 25% degradation. It's gonna be 50% times 0.75, which is 37.5. So subtract cost 3%, and then you get your expected returns. Your actual expected returns is gonna be 34.5%. So if live results are 30 to 35%, the backtest was realistic. So that is what it means. So now, ECN accounts. I remember I mentioned it. You've had me mention about ECN, and why it is important for algo trading. ECN is the electronic communication network where all these orders, Forex, gold, all this, where they happen. So it gives you direct market access to liquidity providers, orders matched with other real traders and institutions. Broker earns commissions, not spread markup, and then there's transparent pricing. So everybody can see the price. There's no hidden things here and there. So I prefer ECN accounts than standard accounts, although both each broker offers both. So you can go through this list and see and see how much you're gonna it's gonna make sense for you. So for example, one of the differences is we have wider lots, wider spreads. So 1.5 to 3 pips on like Euro USD, but for ECN, you have 0 to 0.5 pips. very tight spread. And then commission, you are not charged commission in a standard account because they're not entering the market. But for ECN, you are charged like $3 to $7 per lot. So you may think this is more expensive, but for a standard account, hizo 3 pips ni kama for 1 pip ni kama $20 per pip. You see, it's still very important. For a standard account, it's a market maker. Your broker is a market maker for you. But then if they offer you an ECN, they take you straight to the market, direct to the market. And then common volatility, like some of the brokers we see, they do very vitu za majabu huko. And then they requote things. And then for ECN, it's very rare, almost never. They never do that. And then slippage, it's very higher on you may not notice. These are some things that people may not notice, but for algo traders, they will notice it in a heartbeat. So like slippage in a standard account is so high. My gosh, very high. But in ECN account, it's a bit lower. Speed, it takes 100 to 500 ms, milli per second. Milliseconds, yes, milliseconds. But for the speed for ECN is 10 to 50 milliseconds, which is still high. For me, I would prefer 5 milliseconds or 2 milliseconds if it's possible. And then there's conflict of interest. Broker profits when you lose, but for ECN accounts, there's no conflict there. And then minimum deposit is normally $100 to $500, but for ECN, it's a bit higher, but some like the broker I use, it doesn't have any limitation. You can start from $10 upwards. And then it's best for manual traders and beginners, but for ECN, it's best for algo traders and professionals. Like if you've been in the market for more than, say, 3 years, and you'll observe all these things and go directly to an ECN account. Why ECN is superior for algo trading? Let me just mention quickly. Speed of execution, no conflict of interest, tight spreads and lower cost, and then better feel quality. And yeah, it's always better. Let me mention something to do with high frequency trading. I think it's important for you to maybe know something, 1 or 2 things about it, because like 70% of the market is traded algorithmically. Almost 70% of trades in the whole market, Forex, crypto, stocks, all of them, it's algorithmic trading. But there's an aspect called high frequency trading, which is some hedge funds do this because it is more efficient and it affects the whole market. So that's why you see things going very fast, and it's because of high frequency trading. It's not normally allowed for retail traders, but I like to make it known to anyone who is doing trading so that they understand how the industry works. Any question?
No, you're good.
Okay, so so you will just go through them, but 70% of trade, it does 50 to 70% of US trading volume, equity trading volume. Equity is stocks. Then 40 to 50% of Forex spot volume. This is spot only. And then the average duration per trade is 0.1 to 30 seconds. This is very fast. And then top farms make billions annually just doing this. So it is very profitable for anyone who does, for any farm that is doing this. And then it requires more than 10 million plus technology investment. So it requires $10 million plus technology investment to be able to do this. But I'd wish for people to know that this happens so that they adjust correctly. So major higher frequency farms are like, I've listed them there. So you can go and check. And then let's see the difference between high frequency trading and algo now as retail, because you are competing in the same market. So retail traders can't compete with high frequency trading, not a chance, because they have better technology. They move in seconds, as we move in milliseconds, then they move in microseconds. Capital, you need very high capital, as you can start with $1,000. Infrastructure cost, you may need millions, but for us, you can start with $20 upwards, because you just need the algo and the VPS. Good news, high frequency farms make markets more efficient. This is why I wanted like everyone maybe to know why they are there and allowed. It's because they make the market more efficient for retail by providing liquidity and tighter spreads. They operate in different time frames, so there's no direct competition, but they facilitate the running of the market. Let me mention one of them. I'll just mention them, I won't go deeper. Like Jim Simons, he passed on recently. So he founded, he's known that like the legendary. He's one of the pioneers of quantitative and algorithmic trading, and he was a mathematician and who loved finances. And okay, let me not go more about deeper on them, but he's one of the people I look up to. And yeah, he passed on, I think, last year. Yeah, but yeah, his legacy is definitely good. There's also Ken Griffin, who founded Citadel. There's David Shaw, where Amazon and any founder Jeff Bezos was working. He was working in that hedge fund before he went, and him and his wife, before they went and founded Amazon. And then you have Peter Brown and Robert Mercer of Renaissance. They worked with Jim Simons. And let me just mention some of the common traits. They were strong in mathematics, and they had mathematical and analytical background. They were systematic and data driven. They were obsessed. They had obsessive focus on risk management. Sana sana, nani alikuwa ananini mambo ya risk? Huyo Jim Simons. They are heavy on investment in technology, continuous research and adaptation, building teams of specialists, and discipline to trust the system during the drawdown. So that is one thing I would like people to pick, anyone who is interested to pick up on them. Let me just give you something small snippet about Jim Simons. He used to go and employ only mathematician and the best of the best. Alikuwa anaenda anasend job post, anachagua tu, alikuwa professor wa mathematics by the way, sijui ilikuwa Harvard ama ilikuwa MIT, I'm not so sure, one of those. So alikuwa anachukua tu mathematicians na ni PhDs. So I think he's the pioneer by the way. So alikuwa anasema anyone with background ya economics ama finance asikuje kwa job yangu. Alikuwa anachukua tu engineers na mathematicians au pekee, juu hao wanaweza kukua trained analytically, of which it makes sense. Sisi tunakuanga economists, tunakuanga na so many but mathematicians wanakuanga like strictly follow rules. So yeah, but most nini zinakuanga hivyo. So lessons for retail traders: start with simple, robust strategies. Focus on finding a small edge, not perfection. Risk management comes before profit optimization. Remove all emotion decision making. Markets change, so strategies adapt. Test rigorously before risking money. Realistic expectations, 20 to 40%. Annually, if excellent, not 1,000%. You can go even 100%, which is good. One more thing is a critical infrastructure is a VPS. I think I mentioned to you about a VPS before, so I won't go further on that. You can just come and read the notes. But the main purpose of it is in case it will always be running. It will offer you less latency. In case hakuna stima, you still be trading. It is reliable than your computer, and the monthly cost is very, very little, and it offers fast execution. So that is the purpose of of your VPS. So go for one that will have like 5 minutes, 5 milliseconds. So you can just go and get the best of the best. So I think I'm
Oh, I
done.
see they're paid for monthly as
Yes,
well.
they're paid for monthly. The cheapest
Mhm.
is $6.5. Like the one that I use is $6.5. It can run two maximum in demo it can run more, but in real for a real account, because I have separate. I have ones for demo testing, one for others for a real account. So for the higher the account size, because each pays for itself. So you can have only two. I like to use two so that it doesn't affect the speed, because I'm very keen on having good speed even with a VPS. So yeah. So they're cheap. So and they will pay for themselves. So hiyo ni bill tu na add ya $2, $6. Ikienda sana $12. But if you want highest speed is about $20 per month. Ama $35 if you have many, like if you have like more than 20 algos running, you can go for like the $30 one. Any other question?
Do they so they require, of course they require electricity and a good laptop,
Mm-hmm.
right?
No. A VPS is hosted. It's the laptop now. Your laptop, not your laptop. Because if you are to use your laptop, the one you are talking with right now, you'll have
Mm.
to have it on all the time. You see now it will haribu the laptop. Because
Yeah.
laptop nayo ikikuwa on maybe kwa stima, because lazima pia ikuwe kwa stima, ama something happens, it won't be reliable. So what we do, we normally use a VPS. It's a virtual computer. So you buy that, not that virtual computer, you buy it for the cheapest is $6, $6.5. The most expensive can be $30. But yeah, around, according to the number of algos you're running, because there are people who just run algos. They have like 20 algos running at a go. So you see, you'll need like $20 or $50 per month.
Yeah.
But they are
Yeah.
making so much money, so it already pays for itself. So that is
Yeah.
what I mean. Because if you are to use your computer, utaharibu pia kompyuta yako. Alafu imagine stima imepotea, alafu hakuna internet, kuna lags kwa internet. Alafu pia juu kompyuta yako haiko karibu na servers za hiyo broker, it will become slow. So hapo uta lose hizo milliseconds, so you'll have problems. So that's why you need to have it near. So you'll have, instead of 500 ms, you'll have 5 ms. You see now you are saving on time because it is entering shop, immediately. So it will always pay for itself. Don't worry. Any other question? So for VPS, there's maintenance schedule. So you need to know that you can check every day if everything is running. You can log in every day. For a week, it's like 15 minutes. So ukizi pile up. But ni maybe utasema, maybe in the morning ama jioni uangalie, was it doing what it was supposed to do? Just 5 minutes, hata si dakika mingi. Ama hata ukose, si lazima. So yeah, and then unafaa kunote ni lini inalipiwa. For example, kama inalipiwa by 5th ama 4th, make sure umelipia by then, so that isijizime, because ikijizima all your trading holds until you pay. So that is another, ni kama stima, ni kama kulipia internet, hivyo tu. So effective EA management, I will leave this for you to check. So core strategies can give you 60 to 70%. Tier 2 growth strategies can give you 20 to 30%, and then you can have others to experiment. And then you can have a portfolio. It's normally called a portfolio of different tiers. You check how much does each give me per month. And then yeah, so ukipile up, tuseme moja inakupea 10%, 10%, 5%, hivyo unajipata by the end of the month zote zimekupea 50% returns. and it's good for you. Okay, daily management, morning 10 minutes, evening you'll just read over that, and then you can ainanga stress. Once you get the hang of it, it's just that way. And then monthly deep analysis, you can also do that. So on my end, in case you have any questions, just ask me. I think I'm done for now. Any questions? Okay, so if you are traveling,
Yeah, I have a
mhm,
question,
mhm,
but for the algo,
mhm.
can you set it to avoid volatility, like news?
Yes. There's normally a feature where not all of them are engineered that way. So you can just check for algos that have that news feature, whereby it won't trade news. You just turn off. Tuseme umenunua sahii, umeweka time inafaa kutrade, risk nini nini, hapo chini utaandika ikifikanga time ya news, usitrade, pause. You can tell it to pause for the first 30 minutes, and before, maybe for the first 30 minutes, and after 30 minutes it takes a break, and then it continues any news. You can also do that. So it has NFP. It is ni developer ndo ataandika hiyo, so ukienda kutafuta, enda tu tafuta yenye iko nayo. For mimi wasi prefer, because you see there's high volatility that time, so the only problem is normally slippage, but I normally like it because the one that I use mostly is a momentum. So any momentum is good for me. So because I make so much money in those times, so I don't. But in case anyone would want, I would code it into the EA, but I don't see the point. There's another one I'm creating that will have that filter. It's normally a filter. Inaitwanga filter. You filter out news. So it's an option. So you go, if you are interested in that, you just go and look for the ones that have
Yeah,
that
yeah,
filter.
mhm.
Mm.
I get your point. Sometimes there's opportunity in the volatility for
Yes.
some pairs.
Yeah. The problem is usually the
Yeah.
slippage. It's very noticeable. Slippage inakuanga mbaya. Aya, so 10 commandments of
How do
Nini.
you avoid slippage?
Slippage you can't avoid. It is
Mhm,
the market. Like slippage ni unaona ni hizi spike. Unaona time ya news, tuseme NFP.
mhm,
There's so much, many traders. Imagine all the traders in the world are trading it, and then they push the price up. Shoop. You see that kashoop? That is
mm,
what is called. It comes with slippage. So hizo ni new to notice kama pips, because that's also where the brokers are making money. So they form a wider gap. So kutakuwa na higher gaps, higher nini, kila kitu itakuwa tu higher because there's so much volatility. Everything is all over the place. Now, slippage is inevitable. In normal cases also there's slippage, and an example is tuseme stop loss yako ilikuwa imesetiwa, time is almost out. Stop loss yako ulikuwa umeweka tuseme itoe $50, and then itaenda itoe $80 instead. Now that is slippage. That is what we call slippage. For example, ulikuwa umake profit ya $500, then ujipata umemake $800. That is not slippage. Okay,
mhm,
so it can be good,
mhm.
bad, and it's inevitable. So getting started practical, nitakuachia hizi, you go and see. There's normally a marketplace for EAs in MQL5, which are normally verified sellers, and then they are the vendors. They're called vendors and sellers, so you can go and find them there, and you can see the criteria to evaluate them. I'll leave this notes. And then you need to test, and then have proper risk management. Yeah, so for advanced opportunities, for those who now end up being being provided, they license, they can make a lot of money because they can sell, and then they can work with proprietary firms and hedge funds. So yeah. So common pitfalls to avoid over optimization. It's also called curve fitting. That is tweaking until backtest is perfect. It will fail in live. Use work forward testing. Accept realistic drawdowns. Another one is poor position sizing. You want 2% per trade. Don't do more than 2%. Stick to 1%. Set and forget. You go and forget about your EA. Maybe even it's not running and you didn't know. No kill switch. You don't have when things are not going well, you don't take it. You don't do anything. So that's another thing. Emotional interference. You want to control. The one more advice I'd like to give you is you can withdraw your money after every week and after every day. You see, the time when it's asleep, that's when you go and withdraw your money, okay? So let it run, usikuwe na haraka, and then take your profits maybe. For example, if it gets to maybe 10%, 20%, ndo pia ufeel you're making money, you're making progress. If it gets to 100%, you can now let it to compound. Or also, there are people, if you're not in need of that money right now, you can take it as an investment. But once I normally tell people it's wise, once it makes 100% profit, take that 100%, and then it becomes risk-free. And then, so you can read books, websites, and tools. There's so many things to read on. Let me quickly tell you the action plan. You can do a complete demo. You can complete all demo testing of at least 1 year, and then document performance in tracking sheet. It gives you in MT5, you can be able to see your results. You can download a PDF of your results of your account. I think I've ever shown you that. If not, I will show you maybe in future. And then research VPS providers and cost, and the speed, very important, and the storage as well. Storage will affect the number of years you can have in one accounts you can have in one VPS. Begin live testing with small capital like $100 to $1,000. Establish daily management routine. Have the habit of going and looking once in a while. Like in a day, 5 minutes only. Haya, so niambie sasa maswali za mwisho, you complete this class.
Yeah, I was wondering whether different bots work. Okay, I was wondering whether a single bot works differently with different brokers.
Yeah.
Mhm.
Yeah. So for example, there are brokers that are more expensive than others. So it is wise to look which one is the cheapest and it doesn't have slippages and spread gaps and so many funny things that may affect your bot. So one bot can work differently, maybe in IC markets versus Fusion markets because of the costs and how the nini is behaving. So you can test also as well. So for me, I normally choose the cheapest one. But also, even if it's cheap, look if it has any other hidden costs, like maybe it has bad slippages and all that. So you need to put in mind in that. That is for scalping years. For the normal, maybe swing trading years, because they are similar, that you don't need to worry about that. They are there, you can use them comfortably. For example, if you are maybe taking the 15-minute time frame or the 30-minute time frame or 1 hour time frame, they are good because you see you are gonna take bigger pips, so it will be able to cover the costs per trade. So that's the difference. But for scalping, yes, 5 minutes, 1 minute, very expensive. So you'll see even in your MT5, your nini will be more, your commissions will be a lot compared to your profit. Yeah, so that is one point as well. Any other question?
Yes, so for those who are doing the scalping, for example, the day traders,
Mm.
how how do they adjust? Do they factor that into their costing or?
I recommend 5 minute time frame. That is the best.
Mhm.
Ikienda sana 3 minutes, but 5 minute time frame is good because it will offer you fewer trades but better precision. So even if you are making losses ama profits, the commissions won't be many compared to, because you see in the 5 minute time frame you are maybe trading like 10 trades per day. In the other time frame you're gonna get 1 minute, tuseme utakuwa na 40 trades per day. So you see, that's a very huge discrepancy. So the more you're gonna be charged more commission. So you see, more commissions will eat up your profits. So that is the difference. So the 10 trades are gonna be even more quality setups. So yeah. The other ones are just based on noise. So they'll still make money, but you'll notice up or two the profits are being eaten up by the commission. Okay, let me quickly cover algorithmic, the final thoughts. Algorithmic trading isn't about finding a magic robot that prints money while you sleep. It's about building a systematic, disciplined approach to the markets that removes your biggest enemy, which is yourself. The EAs are simply tools. Your edge comes from proper selection, rigorous stress testing, intelligent risk management, and consistent monitoring. The traders who succeed in algo trading aren't the ones with the fanciest algos or the most complex systems. They are the ones who treat it like a business, accept realistic returns, protect their capital religiously, and have the patience to let compounding work its magic over years, not days. Start small. Test everything, trust the process, and remember, if someone's selling your dream of effortless wealth, they are profiting from your naivety, not their trading system. And finally, the real opportunity here is building a scalable, emotion-free trading operation that grows steadily while giving you back the most valuable asset, which is your time. So yeah, that's all about algo trading. Any final question? Any final remark?
No, I appreciate all this that you've put together. This is amazing. It's very encouraging. And I like that you've pointed out that it also comes with its own form of discipline as well.
Yeah.
Yeah,
Mm.
including backtesting.
Yes, and it can be stressful because you can imagine you are in a drawdown and then you choose to switch off your algo. But then if you let it on, you would have made that money. You see, now there's also a psychology aspect coming in, even in that aspect.
Mhm.
So don't be scared. Yeah, as long as it's working, remember the formula I gave you of when in draw, like how to see the back test time. You remember that formula, you'll find it in the notes. Just use that. I think it
Yeah,
will help.
yeah, yeah,
So,
yeah.
let's go to the next class.
The 50%. The,
Tupatie
okay.
5 minutes break, tukunywe maji.
Yes.
Okay, okay. Thank you so much, Rahema.
Okay, see you soon.
See you soon. Bye. Bye.